Aloha. I'm David Fisher, and I actually have a consulting firm called Maui Venture Consulting. But many of you here on Maui or in Hawaii might know me more from having run the Small Business Development Center at the Tech Park for 19 years. And during that period, I learned a lot about all the different ways that small businesses can get money, and an equal amount of frustrating ways that they're not able to get money. And so what we're talking about today is a new approach, one of about a dozen new approaches of raising money, but it's pretty exciting. It's called crowdfunding, and it's also sometimes called crowdsource financing. The really cool news is that it's been getting a lot of recognition on the national level, to the point where President Obama spoke about it in his jobs bill, and has charged a group within the White House to work on to make this happen. And in parallel efforts, the U.S. Congress has also gotten pretty excited about this, and a bill was introduced in September, and it actually passed the U.S. House of Representatives on November 3rd, a crowdfunding bill, which will take what is currently being done, and I'm going to go into the differences in a second here, but there's a certain level of crowdfunding that's done now on a very small scale that's legal, and it's basically based on donations. So people giving $50 donations, $100 donations, and so forth. And it's used by individuals, nonprofits, and businesses. And this whole current legal approach to crowdfunding is actually quite powerful, and may actually be more important than what is being legalized, because there's some interesting challenges in what's going on with the new legislation, which is going to allow people to raise up to $1 million through crowdfunding. With people, there are various approaches now, and they're ironing this out, but anywhere from as much as $500 into a company to as much as $10,000 into a business. So that's what's out there in the Congress and in the U.S. It's actually in the U.S. Senate in the Banking Committee right now, and they just had a hearing on Wednesday. There are a bunch of other bills that are happening as well that are dealing with being able to be more public in raising money from private investors. Those who know, of you who know me, know we in the last 10 years we did a lot in Hawaii. I think it's close to $2 billion of investment in qualified high-tech businesses under Act 221. All of that was done in what they call private placements to qualified or certified investors. And a certified investor is someone who has $1 million or more in assets, or has been earning $300,000 a year over the last couple of years. And the problem with that whole approach is that it's all done through individual relationships, so you can't put an advertisement out in the paper, and as a result it ends up being pretty secretive, and the broader community doesn't learn what's happening, and it also, by the way, excludes the 99% from investing in local businesses. So the real beauty of what's happening now with crowdfunding is it's democratizing raising money, allowing non-accredited investors to put small amounts of money into businesses. Non-accredited investors today can invest in companies, but they are only the companies that are traded out of Wall Street. Okay, in Hawaii we have about 12 publicly traded companies. Maui Land and Pineapple, A&B, the banks. Do you have the list in your head? Pardon?
Bearfish.
Yeah.
ASB.
Yeah. So it's only 12 companies that non-accredited investors can invest in Hawaii, and most of those companies went public many, many years ago. We used to have a Honolulu Stock Exchange. It started in 1900 and lasted for 75 years, and then went out of business in 1976. By that, starting in the 60s with changed regulations and the centralization of all of this kind of activity in New York, it became very expensive. So as it is today, very few companies go public unless they're raising over 100 million, 200 million. In fact, most of the ones that are going public now are raising billions of dollars, and most of that money is not going, 99% of that money is not going to the company per se. It's going to the investors, and it's sort of a casino game. It has really nothing to do, very little to do with actual companies. It's its own world, the Wall Street world. So what has happened over the last 30 years is Wall Street has become really disconnected from Main Street. So what we're seeing with crowdfunding is an approach to get people back involved in investing in companies in their community and companies that they know. You're not going to invest in a crowdfunding company unless you know something about them. Most likely they're going to be either geographic community, which means they're a Maui company that you can go visit and see, or community of interest. So something that maybe you follow. Maybe you're into motorbikes and you're an expert on motorbikes. So if a motorbike company, a national motorbike company, gets out there and does a crowdfunding thing, all the people who are really passionate about that subject and can tell whether something is BS or not, they're the ones that are going to be involved in that. Plus, the other key part about crowdfunding is that the decision to make an investment, all of the people that are involved in this can make comments. It's social networking. Okay, so they're going to be commenting and saying, "Oh, this is a great idea," or "Have you thought about this issue?" And I just got a great example this morning from the crowdfunding law site, where they give an example of a company that actually raised about $50,000, but they didn't close on it. But right towards the end, some people found some serious flaws, and that sort of mushroomed, and then they decided that they weren't going to go forward with it. So the fact that you open up and create this transparency and get a lot of different people involved in it is sort of the light that cleans and purifies, so to speak, and helps people make better decisions. So that's a pretty exciting thing. The flip side of that is that if you're raising money through crowdfunding, is you've got to be ready to have people come and say, "Oh, this is a really dumb idea." You're not going to be able to censor that. But I think in all of this, by having this transparency, we're going to have a lot more learning happening in the broader community, and having more and more people become engaged in the businesses in their community. So that's the exciting part of this. For more information on all of this, I've got a website. I've been working for about a year now on creating a Hawaii local exchange, sort of an update of the Honolulu exchange. But the more we've been working on this, the more we're learning the phrase local exchange is probably not the right one to use. We're starting to use community finance marketplace more, and we'll have a wide range of different kinds of things happening there. So if you go to hawaiilocalexchange.org, you can get more information. Also, if you want to reach me individually, I'm at D Fisher it's actually DF for David Fisher at mauiventure.net. And what I do, my day-to-day work is helping people with their business plans and so forth. So thank you very much for this part of the presentation, and thank you, Paul.